And in three, two, one. Hello and welcome to another episode of Guide to the Grind. My name, as always, is Jeff Eady. Joining me today is one of my best friends, one of Canada's favorite mortgage brokers, and the random spark to my hayfire, Mr. Jonathan Tilger. Jonathan, how are you today?
I was curious if you're going to go something with the hayfire based on what I know what you went through over the last night, but I'm doing phenomenal. How about yourself?
I am awesome. I am exhausted. I'm a little punchy, so if I get a little off topic today, I please forgive me. I have been up all night at a fire, battling that. So I'm feeling good though. I'm feeling good. Before we get started, if you are watching this and you like what we're doing, please send us a like, share it, comment. All these things really help get the show out there. I know a lot of people come up to me in person. We'd love a little love online because it helps us get this information out there. And that truly is the reason we do Guide to the Grind, Money, Mindset, and Momentum. Today, I have the distinct pleasure of welcoming, actually, before we do this, I have to say to all of our friends south of the border, happy American Thanksgiving. We are fortunate today to have a guest who is not American, which is somewhat of a rarity on this show. He comes from the great metropolis of Collingwood, Ontario. Uh, he shares different ways of investing that don't use that Oh, sorry. I'm going to start this over. Our guest today shares a different way of investing that doesn't use diversification or the buy and hold method. In his new book, Asset Revesting: How to Exclusively Hold Assets Rising in Value, Profit During Bear Markets, and Continue Building Wealth in Retirement, he explains why this approach is the way forward. He believes that investing should be about capital preservation first and growth second. By doing this, there will always be capital to invest and consistent account growth. With over 25 years of investment experience and data working with 20,000 self-directed investors, he is confident that this will become the new industry standard investment model. Join us as we talk about this interesting and different perspective on how it can be able to help us. Wow, that's tough. Have a richer, happier, and healthier retirement. Please welcome to the show, Chris Vermeulen. Chris, how are you today?
I'm great, Jeff. Thanks for having me, guys.
Super, super excited to have you here. I love when we get Canadian guests because we are Canadian, and I love things that can apply directly to the market that we live in. So you're not far north of us. I love that. And we're just kind of getting into asset revesting and how you've kind of coined the term. Want to explain a little bit about that and what your sort of mandate is for your clients?
Sure. So, long story short, is there are kind of the two extremes that most investors or traders do. They either do nothing, which is the buy and hold, you park it. It is a roller coaster ride. As you know, every 5, 10, 12 years or so, there's always a huge market correction, super volatile. The older you are, the more money you have, the more risky that strategy becomes. And then you got the opposite extreme, which are people who want to become active traders. And there's numerous studies across North America, Brazil, Taiwan, you name it. If you actively trade for 300 days or more, 97% of people lose money. It is a difficult game. So that is a extreme as well. And as we know, if you do anything to the extreme, it carries a lot of risk. It can pay off occasionally, but what I do is something kind of in between, which I call asset revesting, which is only investing in assets that are going up. I use technical analysis to identify if a trend is going up, down, or sideways. And I don't believe in diversification, meaning if there is an asset moving up, we will move our capital into that particular asset and we will move out of everything else. And we can touch on all this later, but just to kind of understand what, diversification is, a lot of people think that if they own 50 stocks or 100 stocks, sectors, that they're diversified, and they're diversified within the same asset class. To me, if you own a stock, the stock market is one asset. So if the stock market is going up, I like to think of it like the ocean. When the tide goes up, it raises all boats. When it goes down, all boats go down. It's like that with the stock market. And so my strategy is to act like a surfer, just out past the break. We float out there. We wait for a nice, clean set of waves to roll in. And to me, there's 5 to 12 big waves that roll through the markets every year in different asset classes, could be bonds, currency, whatever, or equities. And when you see these big waves coming with momentum, they stand out clearly. We can pick the asset that fits our our strategy, our risk tolerance. We move on to that asset, we ride that wave. And the nice thing about a strong wave is you can also tell when it's starting to weaken. So we know when to carve off and get out of that and look for the next, or wait for the next wave to come through. So my strategy is very slow. This is where it gets uncomfortable for a lot of people. So for a passive investor who has an advisor who really does nothing with their money, 5 to 12 trades a year sounds really active. They're like, whoa, that's crazy. And then to an active trader, when you say, well, we only have 5 or 12 trades, they're like, well, that's not enough. I'll never make any money, because they believe they need to trade more. So I'm like in this middle zone, where most people aren't. And I patiently wait. We're sitting in cash 30 to 40% of the year. Then we move into trades in and out, and move all of our money into one particular asset class at a time, using ETFs. So that's it from a really high level point of view.
How
Okay.
is it you identify? You talked about the clear signs that identify, hey, here's the trend that's going up. How do you identify, okay, it's going to be happening? I mean, you mentioned a bunch of different things, be it currencies, be it bonds, be it stocks. How do you identify those trends?
Yeah, so there's a lot of different things that go into play. So obviously, I'm a technical trader. So I use the technical. So I look at the charts, typically price action, but I layer in a lot of different things. So what I think a lot of people actually struggle with is they'll throw on a whole bunch of indicators. The thing is, most indicators are all based on the exact same thing, price action. So all you're doing is duplicating the same data. The way I do it, and I talked about this in my previous book, which is Technical Trading Mastery, we break the market up into, we look at it from different lenses. So looking at the price chart alone is one thing. So we're looking at chart patterns, we're looking at trends more or less. And then we look at cycles. There's time cycles at play. There's certain cycles that repeat in the stock market, money flowing in weekly, biweekly, quarterly, monthly, whatever it is. I like to look at where money is flowing through all the asset classes and how strong it is. So obviously, if money, people are getting nervous, they might go to defensive sectors. They might go to consumer staples, utilities, things that you're going to need no matter what during a recession. They might go to gold. So we follow what the sentiment is doing and where the big money flows are moving. And when you put all these things together, you eventually get this signal saying, okay, this is what's going on. This is where the big money is starting to shift. And we can see the market starting to lose momentum before prices even really start to collapse in most cases. So we always wait for price to confirm. So we do need the price to turn, change direction, start to go down, and confirm from a price direction that, hey, the trend is now actually going down. We want out. So we never get in at the bottom. We don't get out the top. We kind of catch that middle section, and we follow price. We don't predict. We don't try to time anything. We let the markets tell us, hey, this is a new trend. There's momentum behind it. Let's hop on. And then we manage those positions, taking partial profits and scaling out as it matures. And that's kind of how we dance around the markets.
How long do you find the lag time between big money and retail money is?
It really varies. I mean, it's sometimes hard to tell between the two. There's such a jumpy emotional market, but I find the big money kind of shifts behind the scenes. 4 or 5 days in advance. I kind of find that I can start to see things shifting and weakening behind the scenes. They're kind of either loading up or unloading, and you see the sentiment changing. People are starting to go a little more defensive or a little more aggressive. And then suddenly price will break, and then all the emotional traders like jump or cover their shorts or whatever side they're on. They're panicking usually, or they're FOMO. They're chasing something that is already kind of had a good move, right? It's always one extreme or the other, panic or FOMO, and they're chasing right at the last moments.
So you mentioned something in there. We had a gentleman on our podcast a few months back who dealt a lot with options and shorts and puts and calls and all of that. Do you deal with a lot with that, or you just straight up invest in the asset?
So I straight up use ETF. So I've done the whole gauntlet. I mean, I started trading in high school. I've done small cap stocks. I've done options, covered calls, futures, day traded, scalped currencies. I've done the whole thing, and that's always been my philosophy. That's why I went to business school, because I was like, I want to go to business school, and then I want to go work on a factory, literally mopping the floor, and work my way up to be the CEO. And so that was like, I'm all about testing the waters, learning everything, find out what I like, what needs to be learned, and work my way up. And so that's what I did with the markets. I did the exact same thing. I tried everything. I hired professionals. I'd sit beside them or just do like online stuff with them years ago. And I learned exactly what fits me. So now what I do is every trade that I put on, I share with people who follow me, is all stuff I do with my own money. So I've designed it. If you've got large amounts of capital, you want to have low drawdowns, you want to have consistent growth year after year, we use ETFs. Everybody can get in, everybody can get out. It's slower moving. I don't want volatile stocks or options or anything like that. So that's where I focus now, is something that's slow passive. I can do a lot of different stuff on the side. The strategy is nice because it's kind of an end of day strategy to get in to trades. And I can see, like, sometimes I'll be like, we are like at least 3 or 4 weeks away from a new trigger, if not more, or, we might hit a target the next day or two, or we might have an exit tomorrow, or I can see these in advance because we're using bigger cycles and timeframes, which is really nice because I can go out and do other stuff. I own lots of properties, multifamily, self-storage facilities. I invent and build products. I got a workshop. So I like to do all kinds of stuff. It's all about the lifestyle. I do not want to be glued at the screen. I like day trading for a little while, but it is a pain in the butt. You're out there hunting for trades. And if you're hunting for trades, you're going to find ones that aren't there, and you're just going to turn your money. So I'm like, what is the least amount of trading I can do? Hit big moves with my entire account, but they're slow moving, like the US dollar index ETFs last year in 2022, stock market, buy and hold portfolio fell like 25% almost. UUP was the play of the year. It moves so slow, but it still had beautiful moves. So while everything is falling apart, we just keep going up and up and up in one of the slowest asset classes. And everybody's like, this is unbelievable. This is so comfortable. And that's what I do, is I walk people through the markets every day or every couple of days with a video. And I say, here's what's happening. These are where the flows are going. This is what we should expect. These are all the scenarios. It doesn't matter what happens. We always have a plan in place. We always have orders pretty much out there. So if something happens when we're out doing something else, that those positions are managed. And that's what I focus on, is managing risk, managing positions, so that we can sleep at night and go do other fun things. The markets are awesome and they're fun, but you don't need to be glued to them and trade. It just sucks people in. It's a very addicting sport. And a lot of people in this space say, oh, we got lots of trades, you can have these huge gains. It's not the reality of things. And most people don't have the self-discipline. They don't have the skills. They don't actually have the proper expectations of what you can get out of the market, or what you should get out of the market if you're going to manage positions. If you manage your risk, you're not hitting 20, 50%, home runs all the time. You're not going to make your 80% return a year that all these people talk about, right? We look for 5 to 12 trades. We make 1, 3, 5% on each of these trades. And some of them are losing trades, but we end up netting out a very nice return every year with like less than 10% max drawdown over the whole strategy. Through bull and bear markets, it doesn't matter. We've got a very low volatility way to, more or less, when things get volatile, we step away from volatility and we go to slower and slower moving assets.
So
that totally makes sense. So go ahead, Jonathan.
Sorry.
Go ahead. Go ahead.
You were talking about doing videos and so forth. So how does someone really work? Like, what do you do with someone? Someone comes on saying, hey, I'd like to work with you. I'd like to learn how you're doing it. What's the whole process? How do you take somebody on, and so forth?
Right. So I don't manage money. I'm not an advisor, not registered, never will be, never want to be. I literally just run a financial newsletter. I share my trades in a newsletter subscription. So people subscribe, and depending on which level they want to subscribe, every morning I can send out a video at 8:30, cover what happened yesterday and overnight pre-market trading and what we should expect today. And the videos are super educational. People learn a ton. They use the videos every day to do some of their own active trading, because we talk about all kinds of opportunities that pop up each week that are pretty easy plays if you want to be aggressive, or they can use it for their own trades. But you just subscribe, and then literally we send out trade alerts. When I have a trade alert, it comes out after the closing bell. So when you're done work or whatever, you get the alert on your phone or in the email, and you just go and you place that order, mark it at open the next day with your portfolio. And if you don't want to actively trade, I provide auto trading at no additional cost, because believe it or not, one of the biggest problems are people. You give them the trades, they're like, I don't feel it, I'm skipping it. Or you hit a profit target, they're like, why are we getting out? We're making money. And we hit a stop, and they're like, well, you liked it 3 days ago, I'm going to hold on to it. I'm like, people are amazing at losing money and getting super frustrated. And the trader door is like a rotating door of people who literally, you have like a few bad trades, or not bad trades, just have a few losing trades. and suddenly they're like, I'm done. And they jump to something else. That people just jump strategy to strategy. I mean, that's not who I focus on anymore. I used to focus on a lot of active traders because I ran a small caps trading newsletter years ago. Now I just focus on people who have logic and want to protect their capital and make money in all market conditions and just look for consistency. I'm done with active traders who are super volatile, super rude in so many cases. It's unbelievable. It's a very different breed between, savvy investors with money and traders.
I find it fascinating. You've been doing this since high school. All I did in high school was a lot of drinking. One of the things that you mentioned is preservation of capital. I think this is one of the most important things that if people can understand. Risk tolerance obviously goes down with age, but more importantly, even in your younger years, what you're losing is time. And time is what really makes the difference with investing. So how do you protect that capital?
Yeah, so I grew up. My parents were entrepreneurs. They had their own businesses. My father had over 1,600 properties at one point out in Calgary, Edmonton area. Him and his partner, and he retired in his early 40s. And being an entrepreneur, he wanted to get back into the game. And back then, we were living high on the hog. It was a pretty darn good life I had growing up. But he got in with the wrong investors who literally took all. Never put all your eggs in one basket. Put all their investment capital into this big deal, and those people vanished. And my parents, they lost all their money. My partner, all their investors, it imploded. And it actually ended up leading to my father having seizures. And I remember him having those. And we thought he was going to die the first time we saw that because of lack of sleep, of stress. A lot of family were investors. So we lost a lot of family member friends. It was wow. Completely devastating. So we went from the top of the food chain to the very bottom. We lost everything when I was really young in my early 20s. And we only had our clothes and furniture. That was all we had. So we went from one extreme to the other. And that was one of the things that set the tone that going, okay, I am never going to make sure this happens to me or my family. And I have been very conservative ever since. And so I am always pushing, how can I be as conservative as possible, but make the most money? I'm like squeezing the markets, and I've found how to do it over the years in a very comfortable way. And it all comes down to having rules in place. I like slower moving assets. I like indexes, bonds. I like currencies. We go into Bill, which is a cash ETF. It pays you a daily dividend. So as we scale out, we're still growing our cash. It's 3.5%, 4% a year right now, just as it's waiting for a new position. So I've just found this sweet spot of, we got to scale out when the market has certain moves. And I've just found, different cycles and different things that allow us to tell us when we should step aside, if we should be in growth index like the NASDAQ or the SP 500 or however it goes. So it's really just comes down to having rules, hitting targets, pulling profits, protecting your money with stops. And when something doesn't work out, we're out so quick. People are like, that was, they can't believe how small of these losses we get. Sometimes it's only like 1% loss or so on our portfolio when a trade goes bad. And people are like, that is crazy. So that's it. It really comes down to managing positions, biting the bullet and saying, okay, I'm wrong, or the markets aren't doing what we thought. We got to get out. And if you can accept that losing is part of the game, and you're going to have a bunch of them, then that's half the battle. But people don't want to be a loser. They don't want to take a loss. And one bad trade can blow up years and years of growth. So that's kind of how we go about it.
Well, I mean, at the end of the day, is stock investing, is it not educated gambling?
I would say so. Like, I'm a big poker player. I love poker. I used to build custom poker tables and send them around. And I've played a lot of tournaments, multiple tournaments at the same time. And, people say poker's gambling. I say there's definitely an element of gambling in there, but you can be a skilled player and end up doing fairly well. I think the stock market, there is definitely some luck, always luck involved. But it is definitely a poker style game. If you know what you're doing, you're very, very strict, you can do very well. It's not about how many hands you win. It's how small your losers are. And you just have to be focused. As you know, in poker, one hand, you could be out, right? You push in the wrong chips, or you do it just a couple times and you're toast. And so to be a good investor, you have to make sure you don't make those mistakes, and you've got to be very cautious and think things through. That's the key. But people are naturally way more aggressive than they really think they are. And the plays they get in, they don't realize how volatile they are. If you go to anyone who has a passive investor with a financial advisor, if I tell them, say, hey, listen, go talk to your advisor and just say, how volatile is your life savings, like in that 60-40 split or 40-60 split, whatever they have. And when they hear that they could lose 40% or more of their money, they're shocked. And they're like, I don't want that strategy. But that's what most people do, right? They're herded into the same things. The whole financial industry has been built around just keep dumping your money in. That'll keep the markets going up. Advisors don't really have to do anything other than take their cut and try and put out fires and say, it'll be okay, just hold off. So I'm not a fan of the buy and hold and that whole mentality. I believe that we can identify if a market or asset is going up or down. And if it's going down, why the heck are we holding it? So many people are still holding bonds. They're down like 40%. Who in their right mind would hold something that is, it's crazy. And that's the whole point of why I'm trying to share asset reinvesting, because right now, to me, we've got most people are the wealthiest they've ever been. We've just gone through bubbles in pretty much every asset class. The majority of people, the baby boomer wave is coming through. They're either retired or very close to retirement. We could be going into a huge financial reset that might last a lot more than a year or two. It could be very long. And so there's ways to avoid this. There's ways to profit from chaos in a very conservative way. And why not? I'm just trying to help people so their dreams literally don't vanish in like an 8-month window if everything kind of falls out of bed in terms of the financial markets and in the real estate space and all kinds of different stuff. So
Yeah, I definitely don't think we're hitting that beautiful deleveraging point. We kind of missed that window. Definitely agree with you on the poker. I haven't played in well over a decade, however, because last time I played at the casino, I lost with 4 kings. The guy had 4 aces, and it broke my heart.
gosh.
Yeah. Now it's a bad beat, but that's when it first came out. About it's probably been over 10 years. One of the things I really like about what you're doing is you're not licensed, which I love, because your financial advice is not tied directly to your paycheck. And it's one of the things that I've definitely seen over the years. And one of the things that I really rebel against in the investment and financial industry is that if somebody's paycheck is tied directly to you investing with what they're telling you, it's damn near impossible to get good advice on that investment. How do you approach that idea with people that, hey, I'm not actually taking your money and I'm not making money off of you for telling you this. I'm just showing you the way.
Yeah. Well, I mean, I'm not making money off their money. I'm just charging a flat fee. So I guess that's where you're going. But pretty much people see the work that I do. If you've seen some of my other interviews or my videos where I share all the cycles and how I go about things, either people are like, I love it. This makes so much sense. Why the heck haven't I been doing this or heard about it? Or there's people that are like, oh, that's voodoo, and they're gone. I just tell everybody, listen, I keep evolving the strategy to manage my money, to do it the best way possible. I take every trade that I put through my asset reinvesting strategy. I'm sharing it with you. And if people got their backs up and they're like, well, how do I don't want them as subscribers anyway. I'll be like, if you're not comfortable with it, you're best to go find somebody else. The group of people that I have are unbelievable. It's an amazing community. They're all just incredible people, super friendly, and it's all about having a good time. We manage our money together. They all communicate. They can all chat with each other inside the members area. Cool. And I am done. I have a very short fuse. If I get a really sharp, negative, rude email, they get their subscription has been canceled, and it's in the terms and conditions. I won't put up with anything. I'm here to have fun. I'm here to grow our money and do it together. That's the whole reason. It's fun to help others, and this is the best time because I think we're in for a huge market reset. But I'm just sick and tired of dealing with rude people. And if we're not the same wavelength, they're way better to go somewhere else because they're not going to stick around anyway. So,
that is awesome, as opposed to chasing after people and being that ultimate customer service person. It's nice to have that reverse look on it and say, hey, you know what? Screw you. I know what I'm doing. If you don't want to be aboard, get out.
Yeah. Yeah. I mean, I do everything very logical, and I explain, how things unfold, how I see the markets, how I manage it. And, you either get it or you don't. And when you see that, the people who get it are on board 100%, and away we go. So it's
So,
comforting to see how things are done, and know why. And then we unfold, and I update daily or every Monday or Wednesday, depending on how you go about it. But, yeah, so I just work with investors who've got the right mindset. They're not about pounding out the trades. They're not about huge returns. They just want consistency, and they don't want to lose money when things do go sour.
so a few things I'm dying to ask, which I'm sure a few people who are on here are as well. And I know that obviously future performance is not indicative of the past, but how long have you been doing this strategy for? What types of returns, sort of annual returns, have you done with this?
So this strategy is one I started 2001. So it's been, as you know, strategies evolve and have to change with the markets, but I've been doing it since 2001, based around cycle analysis and technical analysis. And initially, now it's bringing in sentiment and money flows and all kinds of other things now that technology and stuff has really come around. So I've been doing it for a very long time. The average returns over the long haul has been about 15% return per year. And that's on our 5 to 12 trades. And we just trade one asset at a time. So we're either in the SPY and QQQ. We split the portfolio between, we analyze the NASDAQ and the SP 500. 50% of the portfolio goes to each of those. So that's the only time we'll ever hold two ETFs. And then after that, we're either in bonds or a currency or in a cash position, but really one asset, typically one ETF at a time. So it is like bare bones. And people are like, well, you're not diversified. I'm like, well, we have the index, so we own every stock. It's better than your 150 stock portfolio. and we get dividends and we get all that stuff, right? But it's so simple that people think complex is better, and complex is, to me, is a kiss of death.
So talk to me like I'm an idiot, Jonathan. Quiet. If I wanted to get started today, how do I get started? How much money should I get started with?
Yeah, so the subscription is $2,500 a year US. And really, you just go to our website, thetechnicaltraders.com, and you subscribe to the CGS strategy, which is the consistent growth strategy. And boom, you'll be logged in right after you pay. Download the app. The app's perfect because you can watch my videos on there. You get the updates, the alerts. You can do everything in the palm of your hand, which is pretty sleek. And then after that, you just watch the videos, or you just wait for a trade alert, or you can take it a step further and just open a brokerage account with one of the brokers that we work with, and they will execute the trades in your account for you. So you don't have to really do anything. You don't even have to pay attention. You just, set it and forget it, which is, I'm all about systems. I have multiple businesses. They all run on their own. That's the whole point of the asset investing strategy, is everybody who has a financial advisor, it's like systemized. They have somebody doing it for them while they're out doing their other things. So I'm the same thing. I'm like, let me make my strategy completely automated, hands-free. You don't have to learn anything. You don't have to follow anything, but you can have a chunk of your capital auto-traded and managed in a very different way that will maybe help counter some of your other trading or investments during difficult times, and maybe even outperform it during good times. So I'm literally just packaging it up for those who want it done for them. Say, hey, I'll put in 100K or $1 million or a couple million. We've got run of the mill. It's $2,500 subscription. $100,000 would be a nice size account. It brings it down to a 2.5% fee if you were to go that way. But we have people with many, many millions trading it, and it is like free when you have huge money like that. So,
Sorry, go ahead, JT.
Just gonna say, it sounds like from what you're doing as well. I mean, obviously we're all north of the border here, so whether it's RSP, TFSA, sounds like, because it's just simple trading the ETFs, it can be traded in those things without any problems. Is that correct?
It can. So I should mention, though, because you guys are Canadian, we don't have auto trading for Canadians right now. We're working on it. It will be through Interactive Brokers. But for pretty much every other country, Americans and all that, we have it set up. But Canada has got some pretty strict rules, and it's just taken some time to get that going.
What should somebody do if they don't have 100 grand but want to get started in investing this way?
I mean, It is super educational. You will start like somebody who takes it. So you can look at it as you're buying a course and you're also getting investment advice, not investment advice, but you're learning and getting insight, research, right? So if you wanted to have, if you had 50K or 25K, yeah, you're going to have, if you compare that value to the size of your account, it's kind of expensive, but you're going to learn a lot. You're going to understand how the markets move, proper expectations, how to manage positions. You're going to build trust and faith in a strategy. You're going to experience the markets from a whole new way. And you're going to meet a really good group of people who are like-minded, most likely. So you can look at it as buying a course. As you build your account, it becomes a lower and lower cost overall. That's that, you know, if you just want to bite the bullet, I mean, you can buy a lot of trading investing courses that cost $5,000-$10,000 very easily. And that doesn't give you research and signals to follow for a year. So, I mean, we've got people with small accounts that do just that. They literally want to learn. They say they're coming into money in the next year or so, and they just love what they do. And so they're like, you know, using it as pure warm up and training for when they get more money. So everybody's in their own situation, right?
Mm-hmm. No, I find that fascinating. And what's your kind of favorite person to work with when it comes, to the gamut of, seasoned investor to beginning investor to somebody who's just willing to do exactly what you say and never says boo about it? What do you get most excited about?
I would say, most of the subscribers are 50 plus. I like all those people because they've lived life and they understand realities. They're easygoing. They all have grandkids. They all have, I mean, they're just a nice, easy person to work with, and they enjoy and respect people who are protecting their portfolios or protecting capital. I'm always looking out for the best. Literally in the videos, I'm typically always mentally preparing them for moves coming around the corner. So there is no shocking news. Like I don't care what the Fed says. I don't follow or watch news. I haven't watched TV in like 10 years. My kids are the one who broke COVID to me. They're the ones who told me. They tell me about the banks clashing. Like literally, they're 11 and 13. I don't follow anything. I don't follow other people. I just do what I do, and I don't want to be glued to the screens and get any influence from outside sources. I just stick to the gun. So pretty much just people who have a bunch of money and they just want a chunk of it managed for them, and they see it as an investment, and they know there's a little bit of risk, and they just let it run. Right? They're pretty silent in most cases.
Well, I'd like to back it up a little bit because the tagline for the show is money, mindset, and momentum. You talked about this huge loss that your dad went through back in the day when you were in your 20s. What happened with your mindset throughout all of that? Like what was that initial reaction to losing all of that money? And then how'd you get yourself out of that spot mentally?
Yeah, I mean, I don't know if I'd say it scarred me for life, but I am the conservative, logical. I'm always looking at the negative side and like the strategy of how can this play out on the bad way. And then, so I'm very defensive. I could probably make a lot more money if I really opened up the floodgates and wanted to become a little more risk oriented. But I've just kind of been in this groove forever of just grinding out like steady returns. I don't have any huge blowout years typically, other than COVID was a huge, massive good year. But I mean, I think it's really just always focused me to learn every detail I possibly can and follow things closely and not get overcommitted into anything that is high risk. I always kind of take the longer way, that I figure it out and I'm comfortable with it. I don't do anything that I don't know about, like for example, cryptos. I don't really have any crypto. I have a little bit I bought years and years ago, and I have never traded it since. I just leave it. I don't trade anything that I don't know much about. And my whole thing has always just been to systemize. So you can manage your risk if you systemize things. And through the process, I actually have a course on how to create a trading strategy. So not to how to create it, but how to document your trading strategy. Everybody says, oh, I've got signals that I follow and indicators. The reality is, if you go and you do this little course, as you're trying to document your strategy, you're going to realize you don't have much of a strategy. And when you go and you run it back and look over the signals, you're like, this actually is like a 50-50 coin toss, in most cases, or worse. And they're always missing targets and stops, and they don't, trying to create a process. And the reason I got to this at a very young age is I got my pilot's license when I was 16 years old. And I remember my mom dropping me off at the Collingwood airport. And I remember my instructor, Nelson, he's an old guy. He came out, he's like, Chris, grab your stuff, go to the airplane. I'll meet you there. You're doing your solo today. And I remember my heart dropping for the first solo ever. And I remember looking at my mom, and I think she was more scared than I was. And seeing her scared made me even more scared. And so anyways, I get in the plane, barrel down the runway, take off, and I'm just completely emotionally overdriven. I'm like kind of like crying and laughing. I'm singing. I'm doing all this weird stuff, just super, super like outside of the box, uncomfortable. And I remember once I cleared the airport and I look back and I realized, okay, I got to get into the routine here. I got to get into the circuit, follow all the rules, do the radio checks. So I put my hand on my leg, which I had my checklist strapped to my leg. And just like I did, 100 times before, I just worked myself down that checklist, flaps down, radio call, turning final, all that stuff, right? And I get down on the ground, I'm taxiing off. And I remember Nelson saying, Chris, congratulations, you're a pilot. And that was at 16. I learned that you can pretty much do anything if you've got a system to follow and you just follow the system. Because I was worried, I'm like, okay, I'm either going to crash and burn or I'm going to like grease it perfectly. And it's all because I systemized it. And all this happened even when my dad lost all his money. It all kind of happened. I felt like it almost happened in order. I learned to systemize stuff. So I've always made plans and figured things out ahead of time. And then, of course, when my dad lost a lot of money and we had to start from scratch, it became like, okay, what's the game plan to get back on the hog and get going? And so at a very young age, I mean, I've had multiple different businesses. I've started, had my own healthcare business. I built everything, sold it, built a network across Canada, sold the healthcare business in 2007. And it's all about systemizing. You just make processes, right? And so that is the biggest thing is I have learned through flying that you just have to follow the rules, create rules that are proven, follow those rules, and don't get overcommitted to any investment. Or if you do, you have to have a lot of ways to get out very easily to protect that capital. So I'm very conservative. My strategy is really slow. A lot of investors or traders that are converting to more of my style of investing, and they're like, it's like watching paint dry, but I like it. Like they've accepted the fact that it's slow.
What trends are you following right now?
Right now, I mean, we're along the stock market. We've been riding it up here, so we're still along the stock market, and I think we're kind of in what I call a stage 3 topping phase. I think we're going to see a big market correction probably next year, and it could be the big reset in the equities markets. But right now, the markets are going higher. I'm very interested to see how high they're going to push. We've had a bunch of huge gaps on the chart in the last in the last month or so on the SP 500. Which is never a good sign. It's kind of an exhaustion run higher in the markets. Maybe we hit a double top in the SP 500. Maybe we poke to nominal new highs, which I kind of hope we do, because I can't wait to see what the money and the order flows happen when we kick there, when every news station says we're back in a bull market and everybody piles in. I can't wait to see what the big money players are doing because it could be like this huge fake out. And the nice thing about technical analysis, and this is what a lot of people don't understand or fully grasp, is I don't really care. We don't care which way it goes. And as long as it's trending in a nice direction, it's got power behind it, we're on board. So if we break to another 10-year bull market, we will be long. If it reverses and starts to sell off, we will be in an asset that's going up. If we get into a full-on bear market, stage 4 decline, we will be playing an inverse ETF to profit some of our portfolio from falling equity prices. So it doesn't matter where the markets go. And that's what so many people try to like say in the markets. They're like, well, we're going higher. You got to be invested. You got to do this. Just hold. And I'm like, just let the market tell you what it's going to do and wait for it to show and prove it, and then follow that trend. So that's where a lot of the risk just vanishes. A lot of people are like worried the market's going to collapse this year, and it's just been going up and up. And people are like, oh my gosh, so glad I didn't play, the opposite side of the equation. And a lot of our members still have like triple leveraged ETFs on the short side because they thought the markets were going to keep tanking this in. They're like, that trade has killed all their profits from everything else just because they're trading off what they think and not what the market is actually doing.
So question on the technical side, because this is something that I've been curious about, and you've mentioned it. Just first of all, just explain what it is when you talk about, well, what the big money's doing, what you mean by that, and also how do you actually find the data for that? How are you able to see, hey, here's what the big money's doing?
Right. So I guess I can't really say I know it's the big money. It's more or less if there is enough defensive sectors and commodities having money flow into them and they're moving up long enough that it's saying that it's not just like one random sector or something like that. It's not just like utilities or gold, but there's a bunch of money flowing into a group of defensive plays and they've been moving up for a while. Then I know, okay, this is more of a broad defensive move. It's not just one pocket. It's everything is shifting to these defensive plays or into the dollar. You don't really know if it's the big money or not. I do have a bunch of proprietary indicators that we follow. We track the order flows on the New York Stock Exchange, which is known as the big board. And to me, the big board is all the emotional traders. It's all the big brand names. If you go to a random investor and say, pick a stock, it's probably on the New York Stock Exchange. And if we know what the New York Stock Exchange volume is doing, all getting hit on the bid, all getting hit on the ask, and there's a ratio of certain levels, then we know, okay, today is a FOMO day. Everybody is just buying all the stocks they know, and they don't care what price they pay. If they're dumping shares on the bid and it's a huge ratio to the downside, they're just getting out because they're scared out of their minds. Those are good short-term indicators to tell us when, short-term bottom or peak is happening. And we can look at it from different time frames to figure out, how scared are the herds moving? And the big money kind of is the herd. I don't know how you kind of define the big money. At certain times, the big money is the herd. They will drive the markets higher like they have been this year. It's just everybody piling back in, driving the market higher. To me, the big or the smart money, maybe, although, as you know, the big smart money always isn't all that smart, is kind of doing the opposite of the big players. I see money slowly getting ready and trimming off positions. And this market is on its last legs from the looks of it. You look at the Russell 2000, which is the small cap stocks, it is like threatening to break down for another huge pattern. It's just this big tech driven rally this year around a lot of it around AI is completely masking what's going on behind the scenes. Most sectors are down. Most of them are in bearish market, all falling. Small cap stocks are on the verge of collapsing again. And it's really just completely masked. It's just a kind of a consumer retail investor driven market driving up a bunch of a handful of big companies that does most of this heavy lifting, which is not a good sign. It's not a broad market rally.
What do you say to people when they think being in cash is a bad position to hold?
Well, yeah, that's like everybody's like, I don't want to hold cash. We're going to lose to inflation. And everybody's like, we need to beat inflation. I'm like, well, if you're trying to beat something, it means you're now going to go out and find trades and you're going to start to put on more risk. More or less, I just say, if the market falls, 5 or 10 or 20%, do you want to hold stocks and lose that? Or do you want to make, a couple percent sitting on the sidelines and go the opposite direction? And, some people are very strong and very adamant that they do not want to hold cash. And pretty much I'm like, then this strategy is not for you. This is about protecting and growing. It's not about always being invested and having a volatile account. So cash to me is one of the strongest positions you can have in certain market conditions. It's the best. We use it all the time. And even cash, we still earn interest. It's not much. And people are like, we make less than inflation. I'm like, it doesn't matter what inflation is. You can't just because inflation's high doesn't mean you can go out and beat it. You can go find a strategy to beat it. You just have to accept the way it is. This is where, if you want to preserve your capital, this is what we're doing. And I don't really care about inflation. I don't want to stretch myself outside of a comfort zone and take a loss because I want to beat inflation and get another percent or two. So cash, you just have to accept the fact that cash is a great position and we're in it usually when the whole world is going chaotic and it's really volatile and most people are on, experiencing a lot of emotions and stuff like that. So, I mean, during COVID was a phenomenal move. We moved out of the equities market. We got into bonds. The TLT ETF rallied 19% in 9 days, blew past our 15% target. And then we moved to cash. And all that happened before the big COVID complete washout low. And while we were sitting in cash, everyone else is panicking, losing their investments. We were hitting new all-time highs in our account. And we were able to just focus on our family, focus on our health. That was the most scariest time I've ever experienced in my life yet, in terms of, we're on like a zombie apocalypse, or, the virus that's going to wipe us all out. And the fact that we were all on the sidelines, we had just made a ton of money from the chaos, and we were back on the sidelines. We could literally just go out and focus on life and kids and cleaning our grocery bags and all that stuff. It's so super important. And while that's an extreme situation, that happens all the time. The stock market sells off, and we're in something that's slowly just walking its way up, just chugging higher, like the US dollar, UUP. A big move for that is like 1.5% move. If we can catch 1.5% while the stock market falls 5 or 8%, I will take that any day. So yeah, cash is just a really important thing that people need to either accept, or they got to accept higher volatility if they want to force themselves into a trade, just because they want to be in something.
So cash is still king.
I would say it is. It's a secret weapon that nobody uses.
What's the lag time going liquid if somebody's in a ETF?
The lag time. So as soon as we get into a trade, once we know the fill, we send out an update saying, here's our first target price. Here's how much we'll sell if we hit that target of the position. And then we put out a stop. So literally we have standing orders out there. So if the market goes against us, prices hit, you're out. So there is no real lag time. It's not like it's an end of day signal. Targets and stops are real time. When we want out, either to take profits or we want out because we're wrong, we just want out, and we just exit right away.
I think that's huge that you can admit that you're wrong from time to time. Honestly, I think it's one of the worst traits of the industry, is that even when people are wrong, they blame it on things. Oh, well, this war started over here, or, yeah, we were wrong. You went down on this, but you were up on this. So overall, you kind of broke even.
That's a big thing. And that's where a lot of people naturally gravitate to. The blame always turns out to, it's manipulated, it's rigged, the Fed screwed me. I mean, I believe the markets are rigged. They always have been. Anything with lots of money flowing through it are always going to have shysters and scams, and they're rigged and stuff. But that's part of the game. You have to learn to play within a rigged game. You have to accept it. And sometimes it works in your favor. Sometimes it doesn't. There's nothing you can do about it. So just move along.
Well, and when you talk, sorry, go ahead, JT.
I was going to say, it goes back to what you're talking about at the start, which is just having discipline, having a checklist saying, here's my in, here's my out, going both ways. I mean, going back to the poker hand, and yeah, you will have the odd time you're sitting on 4 kings and the other person beats you with 4 aces. And as long as you just stay within your, hey, here's my risk parameters for this particular hand, you're still alive. You're still going to keep going. Yeah.
Yeah. And that's one thing I do. So when we more so when we get stopped out of a trade, if a stop gets hit, one of the things I send out to everybody, I'm like, congratulations for all of you who exited the trade with me today, because you have self-discipline. You are probably one of the most successful traders in this group. And you have to, nobody likes to take a loss. I hate I'll watch the charts as I know I'm getting close to a stop, and I'll watch it get hit. And I'm like, it's such a crappy feeling. And I tell everybody that because everybody feels the same way. It sucks to take a loss. I freaking hate it, but that is part of the game. And as soon as I take the loss, I write everybody, I'm like, listen, we're out. Feels great to be back in cash. Let's wait for a new setup. That is just, we just got punched in the face. That's it. We'll be fine tomorrow. Away we go. And just be happy that you're out of it, because a lot of times the market just keeps going lower and lower. And I always hear from those who say, what should I do now? Because I'm still in the trade. I didn't get out when you got out. And of course, I can't give individual investment advice. That's not what I do. I'm just like, we got out, 4% ago, and that's what we did as a group, but people always have to just get in the way. They can't bite the bullet, tear that Band-Aid off. It feels good. Once it's off, you're like, let's relax. There's no more trade for another week or two, probably. So let's just relax and go on to do some other stuff.
I think that is just such a fresh perspective on this whole thing. Hey, we're going to sit and chill for a couple of weeks. Took a loss, have a drink, chill out. Then when we're ready, when we've gathered ourselves and we're no longer emotional about this, that's when we can go back in and start doing it again.
Yeah.
Sorry, go ahead.
Yeah,
Go ahead.
the other nice thing is when we move out of those positions, we move into the Treasury note ETF bill, which if you look at the chart, it just keeps going up. So the nice thing is when we move out of it, we're in something that's going up. So people they're visual beasts. That's the whole reason I got into the stock market, because I started in high school and I'm like, oh my gosh, we made like 180 grand in a semester. I'm like, that is what I want to do. I don't have to talk to anybody because I'm an introvert. I'm not a huge fan. I will stand up for what I believe in and share, but I will gladly stay in the back and do my own thing. I don't remember where I was going with that.
Chilling,
It'll come
having a
back to
glass
me.
of wine, not being emotional, going back in.
I can't remember now. Good memory, but it's short.
I wanted to go back right to the very beginning. You were talking about surfing. Are you a surfer?
I am. I'm more so a kiteboarder. I love kiteboarding, hydrofoiling, yeah, snorkeling, spearfishing. I live on the water. I love it. It's as good
Nice.
as it gets.
Nice. What would you like to leave folks with today as we wrap this up?
I think people just need to take a look at their overall stock portfolio, stock and bond portfolio, and if they're with an advisor, find out what kind of risk they have, what the strategy they're invested in. If things go sour like 2008 again, or 2020, the 2000 tech bubble, what's going to happen with their portfolio? Figure out how much risk you actually have with your life savings, and if you're a really active trader, you should maybe really think about finding something that is consistent and that doesn't suck you in every day and chew you up and spit you out. And you've got these emotions and if you're blaming the markets, you're blaming stuff and you feel like it's rigged, you're over your head, you're out of control. I actually wrote a really good article talking about your personality. Have you guys ever heard of the Myers-Briggs personality test? So I wrote about that and I did analysis, and there's 16 personalities. 13 of them do not bode well for active trading. And if you're one of those, you are going to suffer to high emotions. You're going to lack self-discipline. If you're disciplined in other areas, the market will make you not disciplined, because your emotions will take over and you'll trump your rules. You'll just forget about them. So you need to figure out what personality type you are. And if you struggle with emotions, then you need to find something or somebody who can help you navigate the markets. You either need to follow signals if you have enough self-discipline to follow them, or you need it just done for you and have it auto traded, or find an advisor or some investing club that can do that for you. So you really need to figure out, do you want to commit? Active traders don't want to hear this, but if you're not going to commit your life to the markets and put in 20 years, 15 years and live and breathe it and focus on it, you're probably never really going to do exceptionally well in the long run. It's a never-ending, always evolving market condition. You've never learned it all. And if you're not planning on making it kind of a full-time gig almost, you should just find a way to have it done properly for you, because it's a rotating door. It's just a matter of time. You can go 10 years and do really well and lose it all in a year in a bear market and blow it all up. And that's what I found. A lot of our investors, they're older and they've been trading for, some of them, for 20, 30 years, and they take these massive losses in precious metal miners or in whatever they're in, and they move to Bitcoin. They're chasing the big money and they lose everything. And they're so frustrated because they've done it for 30 years and they have nothing to show for it. And they're just like, I'm done with trying to do it. I just want it done right. I want something consistent. And that's my whole thing, is I want to deliver consistent, low emotion kind of strategy.
That's awesome. How can folks find you and get started with you?
Sure. Yeah. They can go to the website, thetechnicaltraders.com. There's a free newsletter there. So if you want to get a taste of what I'm doing, there's also a video, a recorded presentation I did that'll show you all the nitty gritty of what we didn't even get to touch on some of the other really cool stuff there today, but how I go about it, what's evolving, how the markets move. And you're going to see if this resonates with you or not. Does it fit your personality type? Does it fit how active you want to be active around the markets? You're either going to go, this is amazing, or that's not for me. And that'll be like kind of the best thing to do, and then go from there.
Not going to lie, I had a feeling that was where people would go, since it is over your shoulder there, but I wanted you to say the words. We'd love to have you on in the near future, Chris, and get into that topic. I think that's fascinating how all of that works. Thank you so much for being here. Jonathan, anything you want to wrap up with?
Absolute pleasure speaking with you today, Chris. All the best with what you're doing. Sounds like you're doing great work. And for those people who want what you're doing, I suggest check out your site. Go see what you're doing. Sounds great.
I appreciate it, guys. It was a pleasure.
Awesome. Thanks so much, Chris. Thanks, Jonathan, for being here. Thank you for listening all the way through. If you like what you heard, you'd like to know more about what Chris is doing, again, go to thetechnicaltraders.com. If you want to know more about Jonathan and I and where we're going with things, you can go to guidetothegrind.com. We have everything up and running and not working perfectly yet, JT, but it's coming. I swear it's coming. We're working on it. Other than that, we just want to say thank you for being here. Have a fantastic day. And we'll see you soon.